We have Alex on the line from Montreal. What's your question?
Yeah, I'd like to ask you about New Flyer Industries. I believe they're the largest bus manufacturer in North America, and I believe they just got a big order for about 100 buses. So I just wanted to know your opinion on that stock, whether it's a good time to get into it. Thank you.
Sure. So, Alex, New Flyer is a position we've had for quite some time in a number of our portfolios. We have reduced the position pretty significantly over the last little while. Fundamentally, it's a great business. They are dominant. They've grown, through acquisition and organically. Most recent quarter, their book-to-bill, or the number of new orders versus the ones they've billed out and shipped, was like 1.28 times their billings, which is great. So their sales are going really well. Their aftermarket business is doing less well. So, we're at one of those times when we're in a very strong equity market. And
a very strong performance for that stock over the past 5 years.
And it's been a wonderful performer. But for the first time in a long time, it's trading below the 150-day moving average. So technically, it's less attractive. It made a lower high at $55 in November from the high it made at $58 back in April, May. So, again, we're in a market where there's a lot of stuff that's working. So, if you're a patient investor and you're making a long-term investment, that's fine. In my world, I really want everything working today if we're in a decent market, and so we've used it as a source of funds to go some other places. So technically not so attractive in the current market.
Yeah, very interesting. All right, we have an email from Anne in Kitchener, Ontario. She wants to talk about Apple. Would you enter this stock at these prices?
So, Anne, we bought Apple the first time at $3 a share.
Ooh,
and
that's nice.
It was interesting. When the market rebottomed in March of the next year, it was at $6, so it was strong technically then, and it's been a wonderful stock since then. Look, Apple is an inexpensive company. It's filled with cash, but it's got lots of interesting catalysts in it. We own the stock. I think the most recent iPhone, the iPhone 10, is really interesting because it really gives them the only true integrated platform for augmented reality, which could turn out to be much bigger than I think people think. I think margins are strong. When we look at the services business, it's growing very rapidly, which is more or less recurring revenue. So I think that this is a stock that I would continue to buy here. I know that it's done remarkably well. The difficult thing is, when you're the absolute leader, it's easier to remain the leader. You get the best employees, you have the lowest cost of capital, you got a big tailwind. If you get the ability to repatriate cash back to the U.S., that's a positive. And in general, it's probably under-owned given its market cap in the space in the market, and it's in kind of a sweet spot. So I think it looks very attractive technically and fundamentally.
As you said, not an expensive stock, trading a little less than 15 times forward earnings. All right, we've got Stephen in Guelph, Ontario on the line. What's your question?
Hello, David. I've been wondering how I could invest in Tencent, and I know I'm pretty sure it trades in Hong Kong. Then I discovered this ETF, the CQQQ, and it seems loaded with all of these Chinese companies. So I know it's gone up a lot. Should I still get in?
Sure.
Thank you.
So, Stephen, I run a macro fund, which invests across asset classes, geographically unconstrained. And one of our big themes in that fund has been China. I think it's 6 or 7 or 8% of the fund. And it's been Chinese consumer. And I just use ETFs to express our view here. So CHIQ we own, which is the Chinese consumer. I own one KWEB, KWEB, which is the Chinese web companies, which includes Alibaba, Tencent, and so on. CQQQ is one that you could also use. Look, these are not inexpensive companies. I think the perception is the market opportunity is pretty big. And as a piece of a portfolio, I see no reason why you can't have a piece of this.
Yeah, and the Guggenheim Investment China Technology ETF the caller talked about, turns out that Tencent is the single biggest holding, although Alibaba's not too far behind. Yeah. I got Wendy in Edmonton on the line. What's your question?
Good afternoon, gentlemen. Hi, David. Would you consider WCN, the Waste Connection, is a recession-proof company like oligopoly? How about the debt ratio and the dividend grow? Thank you. Bye-bye.
So, Wendy, Waste Connections is a company that we own and have owned for some time. Interestingly enough, the waste business is actually fairly economically sensitive.
Really?
In the end, you know, their customers, a lot of them are commercial customers, and as the economy strengthens, you produce more waste. So this is actually a play on a strengthening economy, and actually, I think that's one of the reasons you would want to own it. It's an industry that has consolidated down to a few players. Waste Connection has a very interesting geographic footprint in parts of the U.S. that are growing very nicely. You know, stock's pulled back a little bit from $96. It's trading above the 50-day moving average, above the 150-day moving average. Technically, it's sound. I could see buying the stock here. You know, remembering that from a macro perspective, we do think that equities have some legs in front of them, despite lots of people worrying about all the things that could possibly go wrong. We have a very constructive environment, and for the industrials in general and companies in this area, I think it looks attractive.
All right, and any viewers who just heard a monster sneeze, it wasn't me. It's a tight little newsroom that we operate in, but David stayed the course. We're going to be back with David Burrows. He's President and Chief Investment Strategist at Barometer Capital Management. He wants to answer your questions about North American large caps, so call us toll free, 1-855-326-6266.